Hello and welcome. In this video, we will discuss the outlook for the gold price. The price of gold has been volatile recently. Since August of this year, the gold price has moved up from close to rupees 70,300 per 10 grams to rupees 81,800 per 10 grams in October. This move in less than 3 months was in line with global trends. Internationally, the gold price measured in US dollars has been on a steady rise since early 2024. However, the price of the yellow metal has taken a hit. In just 2 weeks, the gold price fell about 7% before rebounding a little. But what about 2025 and beyond? If you are going to buy gold now, then you would be interested in the future price trajectory. So let's look at the top factors driving the price of gold. Now do keep in mind that this video is for information purposes only. It's not a security recommendation and should not be treated as such. There's no opinion or view on any security covered herein. Reason 1. Inflation and interest rates. Gold has historically acted as hedges against inflation. Gold's record in this regard is very good, going back 3,000 years. Inflation has remained sticky all over the world. Although the rate of inflation has declined since its peak in 2022, it still hasn't gone back to the pre-COVID levels. This has provided support to the gold price over the last few years. Central banks around the world have raised interest rates to fight inflation. Now, they seem to be satisfied that inflation will eventually come under control. Market forces, that is, reduction in demand, will bring down prices to acceptable levels. Thus, interest rates are not going to remain high for much longer. Also, central banks are not comfortable with the idea of keeping rates high for so long that it becomes a trigger for a recession. Thus, falling interest rates are associated with a rising price of gold. If interest rates have peaked and they are on their way down, then gold prices has some room to go higher. Donald Trump's election has raised the prospects of higher inflation due to trade wars. Thus, there is a possibility of interest rates not falling as much as the market earlier expected. Thus, investors will have to keep a close eye on this. 2. Recession fears. Much of the developed world is barely growing. Some are in a recession or close to it. Gold is seen as a crisis hedge. If there are fears of a recession, then investors have, in the past, diverted funds to hard assets like precious metals. But the US economy has held out quite strongly so far. Thus, this reason has not contributed too much to the up move in gold prices in 2024. However, there are concerns in the US that the economy is slowing down. If the 2024 economic slowdown is serious enough, then the US could follow other developed nations into a recession. Right now, that possibility appears low due to the strong labor market in the US. But many other economic indicators are not so positive. Much will depend on how Donald Trump's economic policies plays out in the US. If the US economy receives a boost from tax cuts and deregulation, as Trump has promised, then gold might not do too well in 2025. Gold is the ultimate asset to buy in times of fear and uncertainty. Media reports suggest that central banks have increased their gold purchases recently. There has been strong demand for gold from individuals in wealthy nations too, especially the Middle East. The smart money clearly wants to hedge their bets and prepare in advance for a crisis. The tensions in the Middle East has only added to the concerns. Thus, higher demand due to fears of bad economic times ahead could become an important reason for a sustained rise in gold prices. 3. Strong dollar. Donald Trump's victory in the US election has given a boost to the dollar, which has put some pressure on the gold price recently. This is because the markets believe his policies will be bullish for the dollar. If the US economy revives, then money will flow back into the US companies and assets. Also, if inflation were to go up due to trade wars, then the US Fed won't cut interest rates too much. Lower interest rates are positive for gold. If the downward trend in interest rates is not going to last too long, then that would be negative for gold. However, it is too early to say how Trump's policies will play out. The short term weakness in gold may not last beyond a point. It will all come down to how long the recent strength in the dollar lasts. 4. Emotional reasons. Finally, there is a mostly underappreciated reason for the rise in the gold price. Gold is an emotional asset, perhaps even more than stocks. Whenever the price of gold rises, everyone starts to talk about it. These conversations create a sense of desire to buy more. Those who didn't buy in earlier rallies feel a fear of missing out or FOMO. They hear stories of people who bought gold at around 45,000 rupees and are now sitting on solid profits. This makes them feel that they have missed out on a great opportunity. This feeling of FOMO, when the price of gold is surging, is a strong motivation to buy more, especially in the ETF form, as it enables quick buying and selling. We have already seen this happening as ETFs have become very popular with retail investors. However, the reverse is also true. When the price falls, as it has done recently, FOMO is quickly replaced by plain old fear. Also, investors on the sidelines tend to delay their purchases, hoping for even lower prices. This can act as a dampener on gold prices in the short term, but this does not play a big role in the long-term upward price trend. At Equitymaster, we recommend holding at least 5 to 10% of one's total investments in gold. It makes sense to hold some gold in one's long-term portfolio, but it doesn't make sense to speculate on gold's short-term price movements. Also, while considering an investment in gold, have a time horizon well beyond 2025. Just because prices have gone up or down recently doesn't automatically make gold a good or bad investment. Do your due diligence before buying gold in any form. Happy investing.